people don't know how we met. Craig and I actually met a long time ago when I was a hair model for Vidal Sassoon and you were modeling for Calvin Klein jeans, right?
Right.
What's going on, Craig? It's good to see you again, man. It's been almost a year since we did this before.
Has it? I was wondering exactly when that was. When was it exactly? Do you remember?
I want to say it was around March. It had to be.
March.
I mean, I didn't come to crypto till like March of 2021 or May
Okay.
of 2021, and then we met obviously, and then but I think it was 2022, but it was around the spring. I don't know, maybe
Okay.
February.
Yeah, that
Yeah.
sounds about right. I said I'm horrible with time, man. So
Yeah, no, I mean, so am I, dude. Especially when you're looking at charts every
right.
single day, every single day.
They all
And
run
I had
together,
a
man.
you have the beard and everything going. I had my goatee going for a while, but I was starting to get really bad farmer's tan in Florida, so I had to cut that.
Must be nice. It's been cold as shit.
So
Actually, we've had a mild winter, so I can't bitch too much.
yeah, I know. Yeah, it has been pretty good. What is I guess I want to so everybody's just, crypto savvy, obviously, and I'm Brendan from Market Makers. And you know, we had a couple questions. We have a lot of viewers that watch both of us back and forth, and it's probably one of our number one comments is I only watch you, I only watch Craig. You guys got to do another stream. So we collected a couple questions. Lee, the guy working the software, is going to ask them, and then we can just ad lib on those, and then we can do whatever, share charts, talk about the markets, and all that fun stuff. So Lee, if you want to get through one of the questions or ask them both, let's roll.
Yeah, sure. We've got through these questions here that are kind of double barrel anyway. So I'll go and throw it up on the screen while I talk about it. But it's what are your views on the market right now? Where do you see us going? And if everything does go poorly this year, what's your predictions for the bottom? So if you want to just go ahead, I'll mute myself.
You want to go first, Craig, or you want me to go?
Go ahead. You go first. I'll follow you.
I would say it depends on the market, obviously, but we track some different things. We track some similar things. Obviously, Craig looks like the Dow. I look at the S&P a lot, and the S&P. I mean, I think we're pulling down to 3,000 here in this first wave down. And if the rally that comes on that off that bottom doesn't hold, which I don't anticipate it will, then I think we're going lower. And the mean reversion would have you at 2,400. I've showed those charts before. We'll show them on the stream. But every single bubble, because you have your bubble pop pattern. I have my boom bust bubble. Jeremy Grantham calls it a super bubble. Everybody acknowledges, I think, that's in the know that this is an equities bubble. Every single bubble tends to go below mean. So Michael Burry has 1,800, just to give you a frame of reference from the Big Short fame. So I think it has the capabilities to go really low. And just like in .com and just like in 08, 90% of the people won't see it coming. And 80% of retail loses money trading. And 94% of professional money managers cannot beat the S&P over a 20-year period. So most people are going to lose money. And that's the whole key. And that's why you get superstars like Michael Burry that get movies made about them, because it's very few people that make money, that play it right. And I think for most people, what they can do if they're not trading, if they're not watching Craig, if they're not doing trade setups, just wait, man. Just wait for the bottom. Sit in cash. It's nothing complicated. Everything will get cheaper later this year. And I think, Craig, on the Bitcoin front, I think we probably have similar targets. I've seen some of your videos, but I kind of summarize Bitcoin as if everything really does continue to fall apart. And by that, I mean, inflation's not under control. The Fed looks like they're going to push rates towards 6%. The markets keep bleeding off after we have these big rallies, which most people don't understand. They think every rally is a bottom and every rally is a new bull market. But if it does keep bleeding off, I summarize Bitcoin as sub 10K, but my actual zoomed in target is, between 4 and 8. That's kind of where I'm at. And that's kind of the crypto market as a whole, because it's going to pull everything down, and that's the same with S&P, Dow, the big equities. When those roll, they're going to pull everything down. So it's going to happen in phases. And I know you say that all the time. A lot of people that watch us for the first time or that come to this space, they will expect big straight lines, right? It should sell off. It should go up
all the time,
but it moves in waves, man. And, we had 20% rallies in .com, 20 or 25% rallies in .com. This rally that we're in now in the S&P is 20%. It's nothing unusual. had 260+% rallies in the 70s, 45% rally in a 1929 bust. So these are all normal. And as you guys, I mean, I know from watching you, you're trading this, I'm trading it. And I think a lot of our viewers really enjoy that. And I'll kick it to you for your views on the market.
Yeah, I like to watch the Dow and the DXY. Those are my key indicators, and I see the Dow going down pretty low. My bounce targets right now are like between 30 and 32. Probably get a nice bounce in those ranges, and I can see it going as low as mid or lower 20s as a possibility. Not saying that's a guarantee, but there's a lot of stuff pointing to that. I think if this is as bad as I think it could possibly be, there's not going to be many people ready for it. I mean, and every big bear market in the traditional markets in the past, nobody was ready for it, right? When it really takes off, it takes off. After it keeps, hinting to it, and then it rallies and everybody gets comfortable again. And, when it really lets loose, it lets loose pretty good. And I think we're going to see that. And the more bullish and the more excuses I hear about why it should go up, the more bearish I get at this point, especially.
No, I view
crypto.
Yeah, go ahead.
I think crypto is just. I said it the other day. I said Bitcoin's price movement is a byproduct of traditional markets. I mean, that's what it's all boiled down to. And I know a lot of people are really believers in the 4-year cycle, which it could still be in a 4-year cycle and just not be a new all-time high every 4 years, right? You could still get a rally every 4 years, but it doesn't mean it has to go to a new all-time high. And they always talk about if the whole, everybody's thinking the same thing or whatever, then it's probably not going to happen. Well, everybody's pretty convinced that the 4-year cycle theory says a new all-time high every 4 years. So I want to see how that plays out.
So what's your bottom target if in the worst case scenario for like just say Bitcoin? Like I think I know what it is, but just tell people for who aren't familiar what you're looking at.
I've been looking at 35 to 4,500, sometimes September, October-ish. That was actually what I had said in 2021 when I started talking about the Amazon compared to Bitcoin bubble. Yeah, I've always said the same thing, and it's not September yet, so we'll see.
People don't know how we met. Craig and I actually met a long time ago when I was a hair model for Vidal Sassoon and you were modeling for Calvin Klein jeans, right?
Right.
but no, I remember when I first started making those videos after we had that second high, and I had people said your name a lot, and I was new to crypto, and they're like, oh yeah, I watch Savy, you'll like him. And I was like, okay. And I didn't really have time to watch people, but I started showing like 10.5. based on like a trend-based fib from the highs. And we talked about that last time we collaborated. And people, man, the hate, I wasn't prepared for the hate you get for that stuff. But, as you know, we got down to 15.5. And I was thinking the other day, I was talking to Lee, I was like, we got down to 15.5. And I was talking about that back when we were at the all-time high. And if you look at the people that are predicting 250, 500,
right.
It's just, you do it. I mean, we got a lot closer to my target than we got to that 250 target.
Right.
But, people mention you, and I was like, who's this guy that has a target way below me? And now that we have, which is my trading method, now that I just have more candles and I just pull the fib and you see it, and it can easily get there. And people don't realize how easily it can get there. And one thing I always talk about on my channel too is just the economic conditions. Because as you know, Bitcoin's only existed in the longest bull run in stock market history. Right. It's never existed in a bear market, and it's never existed in a equities bubble, which is what we have now. And your target for September, October, 100% agree. It's a pivotal point in the market. Historically, it's always bottoms and tops in March and September, October. And that's why I think we're triggering for a big sell-off coming here, end of March after the spring equinox. And it could happen sooner if we get a hot CPI. So I think there's a lot of volatility and a lot of trading opportunities for people that watch us, because that's what it's all about, right? It's building wealth. And if you can't trade,
and it's the macro big movements. I mean, if you're keeping track of the market as a whole, and that's a thing I get on my channel all the time, you always show the same video. Well, the charts haven't changed. That's why, we're tracking the market, and we are still in a downtrend, no matter how you want to perceive it. There's been no validation of any reversal yet in the macros. So I don't know. It's sometimes it's tedious, dealing with the people when they're not really paying attention. They're just waiting to hear numbers, and they're not paying
Right.
attention to what you're trying to tell them on the channels, and that can get very frustrating at times.
Well,
I still love
people
them.
just human nature. Human nature is people want to be bullish, right? They're not buying Tesla stock to lose
Right.
money, right?
Yeah, you don't
And
have to do anything. You just buy and sit there and get rich, right?
right.
That'd
So
be great.
we're always going to be up against that. But I know from talking to you now and knowing you for a while, I mean, you obviously trade long too. You come from the penny stock background. I come from the energy trading background, and we go long and short. It's just you trade the primary trend overall to get the biggest returns, and the primary trend has been down clearly.
Yeah. The trend is your
Yeah.
friend. Even the super bullish guys say that, but they don't follow by it.
All right.
Like all the people
So
that were calling for 100K, even when we turned around, most of them people didn't sell. I mean, they never even sold any, and they kept saying, "I'll sell if it gets here," and they never sold. And I'll sell if it gets here, and they never sold. They had the opposite of FOMO. Well, they had FOMO in reverse. They were fear of missing out.
Right.
Um,
So I know the question Lee was going to ask too, and I was going to ask you anyways, was because we get a lot of people that ask me this, and I know people ask you this. When there is a bottom, or you think there is a bottom, what are you going to buy for the long term? Is there anything that you like when it finally bottoms, that you like this company, or you like Bitcoin or whatever? What are you looking to buy?
Tesla is one of my biggest ones, and
Saying,
yeah, and if I'm correct, we've got plenty of time, and I've been, kind of looking through some. I really haven't made any decisions on anything else, but Tesla is a big one, and I'm looking at that probably around $50 to $60. I might start getting in and building a position in. If we get down there. If we don't, well, but yeah, I'll kind of be especially a little bit more in the next few months, really looking at what I want to get into. But I haven't dug in too deep yet. I'm kind of still just watching and seeing what's going on
right.
now.
I mean, that was literally my answer, was Tesla. And part of that is because it's the most heavily optioned stock in the market, meaning when you're looking at stuff at a bottom, you want stuff that can potentially recover faster because of euphoria, right? Same with Bitcoin. I'd love to be able to get Bitcoin, whether the bottom's 10, 8, 4, 3, doesn't matter. If I can buy it somewhere in that range, because I do think, even though, and I know I've heard you say this too, I think it's very high probability the all-time highs are in for the rest of the decade, specifically in the equities, which to me translates as also in Bitcoin. Doesn't mean you can't have a parabolic recovery. And again, this is just my opinion, but you can have Bitcoin hit. You can have Bitcoin hit 5K and go to 12K, whatever, within a year or 6 months. You've almost tripled your money. I mean, like that's, that's what more do you want? Yes, it might not be 75K, but just looking at the people that are super successful, like Stan Druckenmiller, 30 years, best record on Wall Street, 30% returns a year. He got a lot of flack because he was on CNBC saying the Dow won't make another high for the rest of the decade. And they're like, people on the halftime show were laughing at him. Like, well, that's just ridiculous. Like, is it? Because the S&P took 7 years between .com and 08 to beat the all-time high by $12, and then it took 5 years to beat it again. Like, it can take, and I've heard you say on your channel, look at the 29 bust. You didn't get a new all-time high until the 50s.
Yeah, that was what was it? It was like 42 years or something. Don't quote me on that, but it was a long freaking time. It was decades.
Yeah, it was a long time. And I know you've been going over the bubble pop pattern. I have like my bust bubble that we've been talking about. And I guess let's go ahead and get into some charts too, so we don't go too long and we can chat. Lee, if you want to kick it to me on the share, and then I'll show some SPX stuff. Let me know when I'm good. We good?
You are good.
All right. So Craig, this is what I've been tracking. This is the E-mini, for futures. And this is .com over here on the left, modern market on the right, trend line, the blue line here from the all-time high. I look at candlesticks. I mean, that's how I first learned to trade, was candlestick patterns. So I'm always doing sequencing in the market. And if you can see here, I found this fascinating. First big rally up from .com was 9 bars, 63 days. The second big rally came in at 16 bars, 112 days. Same exact rally set up on the modern market, 9 bars, 63 days, 16, 112. Trend line from the all-time high in .com. You can see you back test the trend line. So after that 112-day rally, you pivot, you back test the trend line. Look exactly what we did over here. Break the trend line, pivot at the 112 days, back test the trend line. And that's where we're at. So what I'm looking at here on the screen on the left, for .com is this quadrant right here. This green line's the spring equinox, which is March 20th this year. We made our all-time, well, not the all-time high. We made the high in the range on the spring equinox. And then that's when you cratered and went down to the next level. And we have a lot of events coming up as drivers. March 14th is the CPI. If that comes in hot, I think you're going to get the sell off ahead of time. But if we do bounce off the trend line over here and come up to that spring equinox, the Fed is meeting the 21st and 22nd. If they shock the market with 50 basis points, you're going to see the pivot down to the sell off. But ultimately, and I've heard Jeremy Grantham say this a lot, that he thinks this is tracking to the exact way that .com played out. And I have to agree just based on the candlesticks. And so I'm looking for that next big pull down that we have on targets. And if I go to my S&P chart here, Craig, this is kind of my modern take on Dow theory. So phase one's denial when nobody believes you're in a bear market. And phase two's FOMO, because all the big money, I talked about this on the channel, but all the big money down here, your Mike Wilsons from Morgan Stanley, Marco Kolanovics from JP Morgan, Savita from Bank of America, Merrill Lynch, Mohammed from Citibank, they all say we're coming to the low 3,000s, trend-based fib from the all-time high down to that swing low up to the high. Gives you the one fib at 31.41. So that's kind of my target. We nailed the target at the 618, 35.93 on the S&P. And I think this is the next phase down. And it's depending if we do rally up at all for like a lower print on the CPI, which I'm hoping for, makes it easier to short it up here. But if we do rally back up and complete literally a double top, just like in .com, that's like a 20-25% drop to get down to that FOMO phase of minus 35%. And of course, the bubble target, and the boom bust bubble and your bubble pop pattern and the super bubble, every single bubble going back to 1972, 73 has hit the 50% target. And most of them have overshot it. I think it's 57% or so in the 72, 73 is 57, 58% in the GFC. And so this is that 2409, but I think it can easily go lower. I anticipate, this is just my opinion, but I just base it on studying these cycles. You're going to have some type of financial crisis. Something's going to drive the market lower. It could be an escalation in conflict, but we are where we are and we trade in phases. And that spring equinox and all of the bubbles has been a key pivot point in the marketplace. So that's something I'm tracking really close on the S&P. I discovered these 43-day pivots in the S&P going sideways. This is just a geometric pattern here, but this has you targeting 34.28. Every 43 days is marked a top or a bottom on the daily chart on the S&P, providing you these big swings. We've been trading these, but this is where we are now. This is our last short above 41.80, and the S&P declined to the 200 and is trying to hold the 200. Just got back above it. I want to see it hold it. I want to see it base, because it's a lot easier, as Craig will tell you too, to short something pumping than something dumping. So that's what I want to see happen on the S&P. And on the daily chart, same thing, just a little bit more zoomed in view here. Low volume on this move down too. So big moves, you want big volume, but the 200 is, you're literally just sitting on the 200. You're resting and sitting on the 200. And what I track with the S&P obviously is the VIX. VIX is in a compressed volatility channel. Every single bear market has had the VIX get above 50. Okay. We haven't got above 38 yet on the VIX. So when this channel expands, I think you're going to see the VIX go above 50. The VIX is a subset of options. When big money goes to buy protection against a dump in the market, you see the VIX pop up. So it moves just like the DXY. It moves inversely to the marketplace, to the S&P particularly. You'll see the S&P dump when the VIX goes up. And right now the VIX is settling back by the 50-day moving average. And so I'll kick that back to you, Craig, if you want to show what you got on the Dow and show what people, what people can see.
We'll just go over the Dow real simple. All right. So just looking at it, basically, obviously, this looks like just another big bubble. And Bitcoin's creation was right here is where Bitcoin was created, right at the bottom, right? So we've been in a bull market that whole time. We had this big drop. We all know what that was in March 2020. Let me go to the daily chart. Indicators on there. But if you look here, this is just a median off all the lows, right? If we were to come back down to test that median again, could be as low as 22.1. I know that seems like a lot, but I really think there's a good possibility we could get that low. But my first levels, obviously, it's not going to drop straight down there in a day, right? So right now I just got fibs on this. I'm looking for a bounce at the 1-to-1 extension, which is around 32.1. If at any time we break above this top trend line, I know most people have their trend line drawn in right here. And the reason I don't do that is because I like alternate touches. So we had a touch here, touch here, touch here. And I think this was our next touch. We never touched over here, right? So, but anyways, if we break this, then all this could be out the window. But as of right now, this is where I'm looking for a bounce around 32.2. Get a nice little rally in there, and then probably down to that 30,800, 30,900 range, get another bounce. Once we break this, though, I really think we can start looking for these lower targets, 26, 24, 22. If this 22 breaks, that's more like the Great Depression type stuff, right? Right here's the 1929 Great Depression on the right, Dow Jones. Currently, if that was to happen, we'd be way down in that range. Is that going to happen? Probably not, but is it a possibility? Definitely. You can see the formation right here, the same, right? We had a higher high here and then a lower low here. Same thing we had here. It's definitely a possibility. Do I think that's going to happen? Probably not this low, but I do definitely see some pain coming. And we were talking about this before the show, how long it took to get back to the all-time high, right? This was in 1929. We didn't break that until 55.
Like 52 or 55.
55. Yeah. So, you're talking decades after the bubble pops. And see, when bubbles pop, it's kind of becoming a tongue twister, but you can see it always comes back down to where it began. And I have we'll go over some other ones in a little bit, including Bitcoin and why I think we could go to those lows. But the DXY, you guys know I've been bullish on this. Anyone that's been watching my channel, everybody wants to show just this dump, but zooming out, that's just a pullback to what we've been doing, right? I think we got much higher in DXY to go. Everything if the markets do crash, like I think is going to happen, everything goes down with it. Gold, silver, oil, everything. S&P. The only thing that rises in those bear markets is the DXY. Like back here in 2008, everything crashed. DXY was the only thing that went up. So that's why I'm real big on the DXY. I've been bullish on it for a while, since way before. Well, when I started talking about it, I think it was probably 2018 or 19. But nevertheless, I've been looking for a target. My next major target is around 122. And if that breaks, then I have much higher targets. We could go over it another time.
Right. And that's where it got to in .com was 121, 122.
Yeah.
And another driver for the DXY is when the equities actually sell off and foreign countries, central governments, central banks have to convert to dollars, that also drives the dollar up. It's why because like you have your charts laid out, it's why when you look at like .com and then you look at the DXY at the same time, they're just moving inversely to each other because when you rotate out of the sector, you're literally cashing out. You're cashing out. You're taking
they're selling while assets are high, taking the cash, and then when the cash gets way up, so the cash is worth a lot more, and then markets have bottomed. They're taking all that cash and buying super cheap, and they just keep doing it over and over. That's how they keep in control of the money, man.
Yeah,
crazy.
No, you're absolutely
it's so
right.
simple. It's insane. We
were talking before the show too, and if you can share that Silvergate too when you get a chance. But the crypto exchanges themselves, and I've talked about this on the channel. I've been really open about it. I know you have too. Just if you're going to trade, only leave on the exchanges what you're going to trade. Don't use them as a bank or a wallet. But I get asked this all the time, and I think I know your answer already too, obviously, but I anticipate more exchanges failing. I mean, I don't see if any of our targets get hit, and even on that next wave down, if we end up hitting 12, 13K Bitcoin, I don't think all these exchanges will be around. I think that's why so many of them have really restrictive withdrawal limits now, and why there's so much secrecy and stuff around some of the big ones like Binance, because you have an excellent Binance chart we were talking about before the show, Binance FTT token. I mean, my suspicion antennas are up because I was at Merrill Lynch in 08, 09 when this was going on, and our CEO and the chief economist would come on our all hands calls and say, we are financially stable. We don't have a lot of exposure to subprime, just like in the movie The Big Short. And then, of course, Merrill Lynch got to within a few days of being bankrupt, and they had to literally change the law to allow Bank of America to buy us and save us. And so I've seen it firsthand. I just don't believe any of these, the exchange CEOs saying how financially liquid they are.
Yeah, I don't either. And looking at the Silvergate chart, you can tell they're heavily tied to crypto. I mean, they were funding a lot of the exchanges, handling a lot of the banking stuff for a lot of the exchanges. I think some of them have backed off now. I think Coinbase backed off, Finance US backed off. I think Kraken still uses them as of right now, but they were tied in with a lot of exchanges. And let me share this chart real quick. Look at the tops and bottoms on this Silvergate chart. I mean, what does that look like? You had your first high, your second high, and now look where we're at now. We had a low, and now we're making a new low. And this just today, something really crazy happened. The gap at the opening of the market was a 34% gap. That's insane. But just look at it. It looks a lot like that looks a whole lot like the Bitcoin chart if you throw up a Bitcoin chart after it. Oh, I think I got one without all there we go. Take these markings off, but the same type thing, right? So, and it's led, it topped before Bitcoin, it bottomed before Bitcoin, topped before Bitcoin on all those. If you look, Bitcoin was what, the end of November, I think this was. Yeah. And you go back to Silvergate, its top was the beginning of November. Then you got your bottom here.
I mean, nothing's identical.
Yeah, you can tell there's major correlation there.
Oh yeah,
Bitcoin,
100%.
which is that's kind of weird, as involved they were with exchanges. So were they over leveraging a lot of things? Who knows? But something's going on there. It's
right.
Wild. But yeah, I seen that going down this morning and kind of dug into it and looked at the chart. I never really cared about it before then, and it obviously a lot of crazy stuff going down there. I just wanted to show that chart real quick.
Yeah, absolutely. Do you want to show your Bitcoin stuff and show that if you have that FTT Binance chart? Because I found that really fascinating too. Lee, if you want to kick it back to Craig.
Yeah, this is my Bitcoin chart, my monthly chart. And last month we were watching for a close below 23,327, which we got to confirm hidden bearish divergence. Now, if this candle, goes up above the prior candle, then it invalidates it. But I still think, this verified it for me. And the doji candle right there, which is a reversal candle, could be indecision, but just everything is pointing to me that was a reversal there in Bitcoin. So I do think that we've pretty much topped out for this bear rally or close to it. Not saying we can't get a little bit higher, but that's where I'm at with that. The weekly, we also had hidden bearish divergence in a downtrend. Hidden divergence is a continuation of the trend. The trend is down. We also, if we zoom in on the weekly, just right here, I'm just going to kind of go over these quick. We had lower highs in the RSI, higher highs in the price action, which is bearish divergence, reversal there, plus our hidden bearish divergence. Everything's pointing to the downside to me. Let me just go into the 4-hour real quick, just to give you my view of where we're at now. This is where I've been looking for the bounce, 23,200, right in that range. If we break below that, 200 EMAs right around 23,000. We may bounce around this area for a while, but my target, once we broke down here, was around 2250. Still looking for that. If we break this bottom blue trend line on the rising broadening wedge, I think if we go below 22.1, we're pretty much going back towards 17.8 to 18,000 before the next, nice little rally. But yeah, I think we're heading down to new lows this year, possibly as soon as March. I had been talking about a false bottom sometime in February or March. Obviously, we're through February, but we still have March to go. And there's the Amazon compared to Bitcoin chart where you always have a false bottom, right? Before the true bottom. Could this have been? That's possible that this was a false one and we only get one more, but I still think there's a good chance of a false bottom between 75, 8,500, get a nice big rally back up to, 14, 15, and then make another bottom September, October. But either way, I would definitely put in some positions if we get down to these, these lower lows here, because I do expect another
Yeah.
bounce first.
That's
What
what
would
I
you
said
say?
too.
Yeah.
I was saying the same thing. Like that's something, I've been telling people I'm going to trade the rally off the downfall
Yeah,
because
for
you
sure.
cover it covers you both ways. Either it is the bottom and maybe the second part of my TA is wrong, or like I expect, it's going to be a big rally that fails and then comes back down again anyways. But I want to get in on that as well because it's all about making money on the ups and downs, right?
Yeah. And you look at, like I said, the bubble pops, they always come back down to where they started, right? Here's another one. This was Nintendo. This took 15 years and it still hasn't reached its new all-time high, right? But same thing. It came right back down to where it started. And you had a big false rally here. And the funny thing is, this one was 65%. And that's exactly what we just got in Bitcoin over here, right? So there's another bubble pop. And here's another one. This was Sony. Sony, it's been over 20 years and still hasn't reached its all-time high. But same
Right.
thing, came back down to its median, or its, where it began. That's why I think we still
Right.
have further down to go for Bitcoin. Unless we start opening and closing. This is why I talk about it on the channel. If we can open and close one weekly candle above, that means the same candle open and close above the 55 EMA. I have it more around 25.8. I think the 55 EMA is now around 25.4. But if we get an open and close of a weekly around above 25.8, then I think, then I would start. I'm not saying the bottom's in, but I would consider that it's possible. But unless we get above them ranges, I'm still expecting lows. And here's that
Yeah.
FTT to Binance chart right here. Just the
Yeah. I like
similarities
this
there
one.
are crazy. Luna made the same thing, and honestly, if you look at Ethereum, which one is it? I have an Ethereum chart up right here. It's pretty much the same thing. I think Ethereum has some very ugly possibilities. I don't know if you have a lot of Ethereum fans that watch your channel, but it could get pretty
I
ugly
get
for them.
requests for it all the time. Well, so
Um,
you got, am my eyes right? Do you have $18.76?
I mean, that's
right there?
the absolute worst, but yeah, I mean, that's just a measured move of this triangle breaking right here.
Right.
Um, but yeah, 926 would be my first target. If that breaks, could go as low as this 280 to $300. And then yeah, I mean, it could get pretty bad. It could get ugly, man. If
Well,
if all this stuff drops, why in the world would this stuff hold up? It's not.
Well, that's my overall market view too, and I mean, and it's funny, like people could look at that and say, "Wow, Craig's even more bearish than Brendan." But I mean, I think you at least have invalidation points. I don't really have any invalidation points for my market view, meaning that that's what I tell people. Like, Lee, let me kick over the share to me, and let me show some Bitcoin stuff because I kind of view it like this. Like, can you see my chart, Craig?
Yep.
Okay, so this is on the weekly, right? So this is again those phases I have for the Dow with the 3 phases of the bear, 3 phases to the bull. But when I look at Bitcoin, where it came from, there's obviously your pandemic crash. It can easily go back there, and both of us have been saying that for a long time. And this is nothing more than a simple fib retracement from an impulse up. Okay, and this gave you the 18,240 that you got below down to 15,500. Discuss phase at minus 93%. That's 4,600 Bitcoin. And this, again, is just the 1618. Fibonacci traders will understand that from a simple fib retracement. And when I look at Bitcoin, we had this Kepler's triangle versus 13.5% short we took. But this is like my next move down, Craig, on a 3-day chart. I'm looking at this 12.8 to 13,000, low 13,000s, a 12,888. And what I'm thinking is going to happen here is either a double top comes back up for the pull down or a head and shoulders type pattern, but that dissension. But what I was telling people on the upside, let me go ahead and do an upside projection here on the daily. If Bitcoin does have an upside projection here, I still don't view it as any type of breakout because I don't see, I'm just going to play on what you just said because I agree with you 100%. I don't see how inflation continues to be high, how equities can sell off, which is a multi-trillion-dollar market. The S&P alone is 34 trillion, all the derivatives and everything combined. People say it's a quadrillion-dollar market, the equities market. I don't see how those things marry when you have the Philly Fed saying we're in recession territory, 100% accurate. predicting all the recessions, right? Inflation above 5%, 100% accurate, predicting all the recessions. You have all of these indicators, the leading economic indicators from the Fed, the Conference Board, all of them saying you are guaranteed a recession based on market history going back to World War II. So this would be the first time that we don't have a recession. First time ever in our history of the indicators that have been 100% predicting it for 80 years. That's why, to me, when I look at the upside of where you could get to, if the CPI print is low, like March 14th, I could see how you get euphoria. I can see how people would want to trade it. But really, I'm just looking at like 26, 27, 8. And
yeah, and
to me,
weekly,
no
I
matter
think
where,
that would, I don't think you would spend weeks up there. That's why I go with the weekly
right.
open and close at those levels.
Yeah, exactly. No, exactly. No, I'm agreeing with you.
Yeah,
I'm just
yeah.
saying, like,
I'm just, yep.
People call you a perma bear, and I think about some of my views, and I'm like, I mean, actually, I sound, overly bearish on top of you, because to me, even if this did do some crazy thing like rally to 30, I'm still
Right.
looking for a top of short, because my macro view, to your point, hasn't changed at all. The
Right.
macro is extremely bearish, and we had Lee on here. We were talking earlier with him about inflation in the UK. They just hit a new high in inflation for the PCE, and their overall inflation is higher than ours. And I think that's a global event. We have a global yield curve inflection. So there's all trading is probabilities and targets. Could we get
Right.
the 27, 8? Yeah, absolutely. But I'm looking for bearish structures in a declining market. I'm going to look for a short. And when we find a bottom, which we both agree will come at some point very soon, a potential false bottom, I'm trading that rally just like you are, because it makes sense to do that. And when
Yeah.
you look at your bubble, like you have your bubble pop, I had this trend line. Let me see if I still have it on here. I do. Okay. So I want people to see it. So this is the S&P again on the 3-day chart. This is your all-time high up here. This white trend line is the all-time high from .com. So, I mean, I was showing people this, Craig, is like, so 1578, and it took 7 years till 2008, 2007 to break that by $12. Okay.
Right.
So if you come down 50%, and this is what I was preaching about with generational wealth getting wiped out, this is only a 30%, 34% move. Yeah, 34% move. So think about 20 years of wealth being wiped out if you come down to that 50% level, which is just 2,400. And a guy I track closely, as everybody knows, Jeremy Grantham, he lowered his expectations to 2,000. So you're talking about if you would invest it back at the peak of .com, you only made 34% on your money, essentially over 20 years, which is basically like a 1.5% return versus an average of 10%. And that's why people don't understand, Craig, and you say this all the time, you get wiped out in bear markets. People always talk about missing the bull run. You get wiped out. You can lose decades of wealth in a single year of a bear market. That's why they're so powerful.
Yeah, I mean, the real money is made in the bear market, because somebody's getting that when they're cashing out, right?
Right.
But yeah, I've been saying pretty much the same thing. I've just been calling it the biggest money grab in history, because I think this one's going to be pretty huge.
I if you think look so at too.
Look at the .com bubble real quick. So this is why I say, I am bullish, but it's just it's going to take time. For one, you can see these are both weekly charts, right? And they were almost to the month on the tops and bottoms. And this took it was about 2 years to bottom right here, right? But afterwards, years and years later, it took 10 years to break the all-time high. But look at all that other opportunity in there. There's tons of opportunity. But once that broke, look what happened. Does that mean Bitcoin gets accepted by the world or something? Possibly. If it did, that's what it would look like. So I mean, I'm bullish in the very long term for Bitcoin. There's still no guarantee that it's going to succeed. But I'm pretty confident that it will do well in the long term. But I'm just I'd rather wait and get these lows than to buy now and then it goes to these lows. Or once there's a confirmation that the bottom's in, then just get in. If it's going to go that high, what does it really matter? I'm not losing money that way. I'm losing money if it goes down from here.
That's what boils down to most people, right? Is like, I tell people all the time, because that's what my family's doing. When I go out for with friends for a barbecue or something, they're like, hey, so where should I just give me? I can't watch all your videos, right? This is my own friends that say this. I can't watch all your videos. Just where should I look to buy Bitcoin? And I said, really, it just matters, like, for you subjectively. Can you sleep at night if you buy Bitcoin at 15K? If you can, that's your choice. I said, personally, I think what's going to happen is you're going to see sub 10K Bitcoin. Could be 8K, could be 4, could be 3. So I said, I'm not even considering, buying spot until we get sub 10K. And then I want to take a look around, maybe call you on the phone. Hey, what do you think is going to happen in the next 6 weeks, 3 months, whatever? And we're going to talk about it, because I want to get as close to the bottom as possible, because if this bubble does play out, just like all the other bubbles, you're going to have some parabolic rises in price, but it's so important to try to get to the bottom so you're not stuck for years.
Right.
That's really key to me. And I don't want to be underwater for years. Me
neither. And you get a lot of people saying, you're just mad and you want it to go lower because it missed the bottom. And it's like, that doesn't even make sense. If it's only at 25,000 and it hit the bottom, if I was worried, I would just start buying. I'm not worried at all, because I truly think it'll go lower. And if it don't, I'm okay with buying in here if the bottom was confirmed here. But yeah, you got to think of it in long term. Like I said, a lot of these people just want to get rich overnight, and they think, that's their whole thought process. They want to get rich, but they don't know how to do it, and they pick the easiest path, or the person telling them the easiest path, and they stick to that. They don't want to wait or put in work or nothing else. They just want to buy, hold, and get rich. Fortunately, that's not how markets work.
There will be a time to do that, but what you and I are communicating and agreeing on is that it's not yet. Most likely it's not yet, I should say, because it's all about probabilities. And to me, the high probability is everything's going to be cheaper this year, guys. Everything.
I believe that my damn self.
Yeah, exactly.
A couple of years ago, I was telling people, around 2021, I started telling people to get into cash and buy things, buy land, buy whatever. Just have tangible things. I said, buy stuff you can hold, grab with your hands, meaning stay out of crypto. And so far that's played out pretty well.
No, I think so. I think, there's guys that call crashes that have been calling crashes for years and years and years. I think what's different is, and why you've built up a strong following, why we've had a fast growing following as well, is that we actually, we trade and we show people how we're navigating the markets. And I think people get a lot of use out of that. And that's kind of why you and I were talking, because we're both retired. Like, we don't have to do this. And but it's something that it's the people that say that you've changed something or helped them out in their life that is really rewarding.
Yes, and I do get a lot of that, and that's what keeps me going too. That's what makes me go ahead and put the haters aside and run with it, knowing I've actually helped people. And my whole point of my channel from the beginning was just to show people how I read the charts, what I look for, the things I do, the things I use to hopefully they can do it. I didn't make it to make calls and say, hey, this is where you go in, this is where you go out, or this is where you buy and you're short. I say, hey, this is what I'm doing, and this is why, and this is how I look at the markets, and this is what I use. In hopes that people will understand it. But or not most, I shouldn't say most, but a lot of people just think of, which I get it. I was kind of like that in the beginning too, where they're like, you can't tell what things are going to do with the market just by looking at the charts. It does what it wants. And, I used to think like that too, but once you're in it for long enough, it's like, damn, there's something to this. So, and it's worked very well.
You know what I love is when you put a lot of effort into like doing these code charts, and you're showing and you put shapes in there, you show patterns, candlestick patterns, and then you get somebody that comments that says, so basically you're saying it can go up or down.
Right. That's all the time.
It's like, why did I spend hours putting charts together to share with you guys? That was your takeaway, that it's going up or down. But
that's just those negative people, man.
People don't understand. I'm sure they understand. I'm sure our age demographic that watches us is similar, because we're close in age, mid-40s.
Yeah.
And but we grew up when you had to read books to learn this stuff. I wish I wish there was a crypto savvy or a market makers back when I started in the late 90s, because there was nothing. You had to go out to Barnes and Noble, Books a Million, buy a book or subscribe to somebody's
And
newsletter or watch Fox
magazines and
News to see
crap.
how. Yeah, it's crazy, man. And now people can get this fast forward track, which is great for them, which is why you have so many crypto millionaires and successful traders, because
Right.
they can see all the. I made a ton of mistakes. I'm sure you would say the same. And that's one thing I would say. I have a bunch of buddies, a circle of buddies that have been day traders professionally for a decade. Every single one of them, a lot of humility. They'll tell you, man, I lost so much money. I'm never going to do that
Yeah.
again. I'll never do
I
that again.
lost everything
And
at
the
one
people
point,
that.
literally.
Right. The people that brag about how successful they are, it's all BS, because I know for a fact everybody's made huge mistakes. I blew up accounts in my 20s that were six figures.
Yeah.
Everybody's made huge mistakes. And the difference is the people that survive and do this as a living learn from those mistakes, man. And I
that's
think
where
our
you get
channels
more patient. I mean, you get patient, you wait for,
right.
you wait for validations and invalidations. And yeah, once you get an understanding of how it is, you start to protect your capital, which is huge.
Right. And what's great for people that watch you or watch me is that we do this so often with like looking at charts every day. And most people, they have a regular job, right? They have a family, they have a husband, they have a wife, they may have kids. So we're able to condense information for them, and you get somebody that you kind of build up this virtual relationship with. And they're like, oh, I like how this guy reads the charts. I'm going to start following him because I don't have time to watch CNBC and listen to the bullshit all day. I want to
Right.
see what this guy's filtering out and what he's seeing in the charts. And that's been a lot of fun too. And then collaborating and doing stuff like this is a lot of fun.
Yeah, for sure. Yeah, it's funny how watching the charts can make you not even care about the news, because you can almost see when something's coming, whether it be bad or good,
Right.
just by the charts. It's weird. Yeah,
Yeah,
I haven't
exactly.
quite figured out why. I mean, I have tons of thoughts of why I think it does that, but I can't. I don't have no absolute proof, but there's definitely
Right.
something behind it. That's for sure.
Yeah, exactly. Well, hey man, we're getting close to that hour mark. So I know we want to kind of end it. And
Yep.
this has been awesome, and I appreciate it. And we'll definitely have to do it more often. I know people enjoy it. So thanks for agreeing to do this, man. It was a lot of fun.
Yeah, for sure. It was a good time, man. I appreciate you getting it all set up and stuff. So until next time,
Yeah.
I'm sure I'll talk to you before then.